Well, folks, last week I said it. I said this was the nastiest stock market I've ever been in the 14 years I've been in the stock market in terms of just the devastation that has been happening in stocks and folks trying to wrap their heads around it. In this video here today, I want to share exactly what is going on in the market because there's a lot of different theories on what is going on in the market right now. There's theories that only small cap stocks are falling right now, or only speculative stocks, or only non-profitable stocks. And so what I want to take you through here today is the truth on what is really going on in the stock market. And then we're going to get into, in the back half of this video, some crazy stuff nonetheless. And if you're thinking about like, when do these stocks ever bottom, right? Like that's a lot of people's like thought process right now. Like, when does it ever happen? Because you see these stocks hitting 52-week low after 52-week low after 52-week low, and it's like, do all these stocks go to $1? Is the stock market going to be finally good when all stocks are down 99%? Like, what is the situation here? So yeah, this is a value packed video. Hope you guys enjoy this. As always, make sure to subscribe to the channel if you're not already, because this is drama time, baby. We got so much drama going on. So I wanted to start this video here today. I want to start this looking at the Russell, okay? So first off, the Russell really hasn't gone anywhere in the past year. But if we look, the Russell's obviously fallen from 2431 to today it's at 2154, and that's in a matter of about 2 months, right? As of today, I'm recording this on January 10th, 2021. On November 4th, 2021, or excuse me, 2022, I'm recording this. And I haven't fast forwarded the year yet, okay? But back in November of 2021, the Russell was at 2400. So we've dropped about 300 points roughly on the Russell, which is a pretty good amount. But keep in mind, the Russell, and I explained this last week, the Russell, unfortunately, like many indexes, has one massive flaw. That massive flaw, like the S&P 500, like the NASDAQ 100, is it's weighted toward the biggest stocks. So the biggest of the big stocks in the Russell, which many of them are way over a $5 billion market cap, right? When you think about Russell stocks, you usually think about under $5 billion market caps. Many of these stocks are over $5 billion market caps, and some of those have held up well, meaning essentially it's made the index look better than it really has been, just like the S&P 500 and just like the NASDAQ 100, right? And so it's a fatal flaw in the Russell. And so really what folks are feeling in this market right now is that the Russell's down way more than 300 points in the last 2 months, right? I mean, a lot of us are feeling it like it was down 1,000 points in the past, 2 months, because the biggest of the big stocks have kind of held together everything like the glue, right? In terms of the index and the way it looks, it's so much worse than what the index is really showing you, okay? Next slide, the second part I want to start out with here is a very interesting stock called Oatley, okay? OTLY. This is a newest stock I've just started buying here, okay? And I want to show you this stock because it's so important on so many levels, okay, in this sort of market right now. This is a stock that here today hits a new 52-week low, $7.18. This company is expected to do about $1 billion, if not over $1 billion of revenue in 2022, which puts it at basically a 2022 price to sales ratio of about 4 right now. About 4 on an extremely healthy gross margin business, in a business that has a decade plus of just crazy runway if you've done any research into this company, right? 52, as far as the 1 year price target on this one, right? $15 plus, which is over, basically a double up from here, over a double up from the stock price from here, as far as what analysts have for the stock, and there's many analysts that cover the stock. But in this sort of market, right? It doesn't matter. It doesn't matter your growth story. It doesn't matter your long-term growth story. It doesn't matter what your net income is going to be down the road. It doesn't matter that you're at 52-week low after 52-week low. It doesn't matter that your 1 year price target analysts have on average, just keep in mind this is the average, right, is over a double up from here over the next 52 weeks. Think about that for a moment. None of that matters in this sort of market. It doesn't make any sense why it doesn't matter, because these things should always matter, but right now it doesn't matter. Now, some folks might say, well, right now they lose money on the bottom line, so who cares what their gross margin is because they lose money on the bottom line right now? Right? That's a flaw in itself. Like you can't just view the market like that, or you're going to miss crazy opportunities over the coming years. And we know the best opportunities in the stock market are always the stocks that have the biggest revenue growth over a 5-10 year span. That is something we do know. That's been proven scientifically in the stock market time and time and time again over the last 14 years I've been in the stock market, and before I was in the stock market as well. Okay. And so the stock market can throw all these sorts of stocks out right now, but like long term, that just doesn't make any dang sense. But this is the prototypical stock in the market right now where people say, okay, great growth story, great long-term profit projections and revenue projections and all those sorts of things. Yeah, analysts are bullish on it over the long term and over the short term, but the market doesn't want it. But I show you this stock at the start here because you're going to find that is not the truth, okay? That is not the truth in terms of thinking about it like these are the only sorts of stocks that are in the market that are getting thrown out right now. Look at something like a Teledoc, right? Well, this doesn't fall into the small cap category, right? It's a $13+ billion market cap, so it's not a small cap stock. So right off the bat, if we want to just think like it's only small caps that are falling in this market, false. Look at a Teledoc, all right? Now, look at the 52-week range on this stock. From $308 to $76 it hits today, a new 52-week low. Now, you're probably wondering, why do I have Kathy here, okay? Why is Kathy's name there? Kathy Wood, ARK Invest. Why is her name there? Well, I'm not going to say she was necessarily buying this afternoon because none of us know that, right? But, I mean, based upon that movement up there, I wonder if Kathy Wood was out there acquiring shares of Teledoc here today because that's a really, really strong move. And we know Teledoc's usually her second or third biggest position in the ARK fund. So, I'm wondering if Kathy Wood was buying there. Look at Teledoc. Based upon where the lows were at today, it's basically a double up from here over the next year. And that's the analyst average for the stock. And so this goes to show you it's not just small cap stocks. It's not just the $1 billion, $2 billion, $3 billion, $4 billion type market caps, okay? Here we are with Teledoc, $13 billion plus company as far as this market cap goes. Great long-term growth story in front of it. None of that matters right now, right? And you might say, well, they do fall in the category of, yeah, they're a high growth company, but they're a money loser, all right? Okay, interesting. And we'll see in this video if it's only money loser companies that are basically having their stocks fall, right? But there's good old Teledoc. Look at the ARK fund here today. I think this was important to pay attention to. 52-week low for the ARK fund hit today. Now, it did come back strongly, and that does make you think for a second, why did a lot of these come back so strong throughout the trading day here today, right? But look at the ARK fund. I mean, it's been devastated, right? I mean, it's not very often you see an ETF like this down 50% from its 52-week high. And that's exactly what happened. 52-week high for ARK's right around 160 and it hit 80 today, okay? If my math serves me correctly, that's about a 50% fall there nonetheless in the ARK fund. And I have a website called kathywoodstocks.com, and it basically updates on a daily basis ARK's top 25 holdings and what their weight is, the market value, things like that. If that's, you might want to save that on your desktop if you care about Kathy Wood stocks, okay? And basically what this shows you is all these stocks that Kathy Wood's in, almost, I don't want to say all of them hit 52-week lows today, but the high majority of them that are in her top 10 hit 52-week lows today or very dang close to 52-week lows. And almost all these are massively off 52-week highs, okay? Tesla's really the only one in the portfolio holding things together. But keep in mind, you might think Tesla's like some massive weight. No, it's only 8% roughly of her fund, right? Zoom, Teledoc, Roku, Coinbase, like look at all these stock prices here today, and you're going to find almost all of them are at or near 52-week lows. And like a lot of these stocks have great long-term growth stories. That's the thing. It's not like these are all garbage stocks that like no one cares about or they're all going to do bad in the future years. Almost all these having tremendous long-term growth stories, but right now it has just been selling. Now, Kathy Wood also blames a lot of this on algorithm trading that's going on in the market. That's a whole rabbit hole I don't even want to get into in terms of the algos and what they're looking at and like the algorithms. Just, the thing about the algorithms is, they don't look at anything, in my opinion, the most intelligent way possible. The algorithm just reads data and it's like, sell, buy, right? And it's a lagging indicator many times, and it's being kind of naive in terms of like the algorithms can't really run projections on where a company's going over the coming years or really understand human psychology on why so many folks are going to want to invest in certain stocks in the back half of this year and into the next year. It doesn't, they don't really know that, right? And so here's something we're seeing. Obviously, Zoom, her, second biggest investment in the ARK fund, right? Look at this one here today. This one hits a new 52-week low again. Now, here's what's really important around Zoom stock. The most important thing you can take from this one is when you're thinking about this, right? We already dispelled the thing like, oh, it's only small caps. No, it's also more than small caps that are falling, right? Look at Zoom. It's a $50 billion market cap. But here's the most important thing. There's also a rumor out there that it's only companies that are non-profitable. Well, here's the thing about Zoom. This company is profitable now, and quite profitable, and they're likely going to get even more profitable in 22, right? And so you can throw out the whole thing like it's only unprofitable companies, because a company like Zoom, look at this stock. I mean, it's literally like a new 52-week low every single day for this stock. And here this company is, that's actually a very, very profitable company, a company that's expected to get more profitable in future years, okay? So yeah, not just small caps, not just unprofitable companies, it's many stocks outside that. Look at that, from 451 to 164 here today. I mean, just a stock that's just been absolutely obliterated in Zoom stock, okay? Now, let's get rid of another one of these theories. Another one of these theories in the market is it's only high PE names. It's like, well, it was only small caps. No. Well, it's only, companies that aren't profitable. No. Well, it's only companies that maybe are higher PEs. No, Corsair Gaming's at a 17 PE, a 13-something forward PE analysts have for the stock, right? And look at this one. It hit a new 52-week low today, 1974. Another 52-week low for Corsair Gaming, CRSR. So we just dispelled every single theory in the stock market that people have had. It's only small caps, it's only unprofitable companies, it's only high PE names. Like, no, it's the majority of stocks in the stock market. And that's why you see, we looked at data recently where it was something like 2/3 of stocks in the, I think it was the NASDAQ, if we looked at recently, are at 52-week lows. And that was as of a few days ago. I can almost guarantee you it's more than 2/3 of stocks now are at 52-week lows. And I pulled up that in a video recently. I wish I would have brought that up for you guys too as well in this video. But it's just interesting, right? It's like 52-week low after 52-week low after 52-week low, and people are like, when does this end, okay? And also, what stocks was I buying today? Because I was out there buying some stocks here today, right? Look at PayPal. This gets rid of the last one of these. People are like, well, it's more speculative companies. No, like PayPal is literally the exact opposite of everything you could possibly think about in relation to like folks thinking stocks are going down because there's certain groups or whatever. No, it's a multi-$100 billion market cap, hit a new 52-week low here today of 177, right? Approaching almost a 50% downside from its 52-week high of 310. It's not a super high forward P. It's like a forward P on the stock is like maybe 35, 33, something like that, right? Great growth story. Amazing company, like one of the best business models in the world, one of the most compelling growth stories of large cap you'll find out there. And here this company is at another 52-week low it hit here today, right? And so it's literally the opposite of everything you think about. Now, I want to show you a stock that's even more interesting than PayPal, okay? That stock is Square stock, SQ, now named Block, right? Look at this stock, another 52-week low here today, a $60 billion market cap on this company, right? And no one wants a piece of Square stock right now. I mean, it's amazing, really. I mean, from 289 to 133, a beast that is Square with the revenue growth this company's had. A lot of folks look at this as one of the most exciting stocks in the stock market in terms of long-term growth stories behind it. They own Cash App, which is usually the number one most popular finance app in all of the United States of America. Like, think about that for a moment. Like, when you own the number one most popular financial related app in all of the United States of America, that's pretty darn powerful, right? That's pretty darn powerful. By the way, PayPal, which we just looked at, owns a number 2 and number 3, because usually PayPal and Venmo are the number 2 and number 3 most popular financial related apps in the world, right? Remember, Venmo's got that big deal going through this year in 22 with basically Amazon. Think about these for a moment. Like, think about how big that is, where you can actually start buying stuff on Amazon through Venmo if you want. I mean, my gosh, does a lot of this stuff get bigger than this, right? But yet this stock just continues to get pushed down to 52-week low after 52-week low. But do look at this, okay? This is something you've got to keep in mind. Look at the change, right? It reached a 52-week low today of 133. Look at the stock now, $11 a share, bounce back there. If there's not some bouncing activity, I don't know what is. Like, what a move up there, right? I mean, you don't just like get moves like that very often. Let's just put it that way. Like, that's an extraordinary move, and especially for a bigger company like a Square. Look at also volume here today. And I keep in mind, I took this screenshot before the market was even closed. 14.5 million shares traded hands here today. Average volume of 8 million. Interesting, okay? Now, so there's a video I put out. Okay, it was an important video. I think this is one of the most important videos I put out in all of 2021. And I posted this video almost exactly 1 year ago. I posted this video on January 13th, 2021. And it says, going all in stocks in the stock market in 2021, not. And I talked about in that video, I went through essentially what was going on in the market, the activity I saw, and like the euphoria that was in the market at that time. And I spoke up on it, and I spoke in a I would call it a more bearish tone, right? And during that time, I was actually somewhat bearish on the market, and I was actually very, very fearful. And if you go back to December of 2020 and into January, a lot of the stocks I was buying, very boring stocks, JP Morgan, Walgreens, I built into $1 million position throughout the month of December of 2020, right? And for me, those are super, super boring stocks. Let's be quite honest. But that's the only place I really saw some opportunity in the market, because it was just, there was just stocks were trading at ridiculous valuations. There was way too much euphoria in the market. It was way too much moon action, I call it. And so I had to speak up on that, right? And as the year went on in 2021, I got more bullish as these stocks fell more and more. And now here we are, January 10th of 2022, and I am at a moment where I am ultra bullish on the market. No, not ultra bullish. Ultra bullish on many of these stocks I'm investing in right now, like to ridiculous levels, like where I am the exact opposite. The feeling I had going through my body when I recorded this video 1 year ago could not be more opposite of what I am feeling right now, because right now I feel like there's way too much desperation in the market, way too much fear in the market when I'm looking at these stocks trading at ridiculously low valuations based upon where I think these companies are going over the next 3, 5, 7 years. And I've been doing this for a long time, so it's not like I'm some new guy to the market and I'm like trying to figure all this out. Like, I know where these stock prices are likely going over the coming years. And it's going to take miracles to get some of these stocks to not perform extremely well over the next 3, 5, 7 years. And so the feeling I have today, recording this, January 10th, 2022, is literally a 180 from where I felt when I was recording that video there, literally almost 1 year ago today. And it does make me think, at least, I do wonder, is this kind of a sign that we're upon the bottom? Because when I recorded that video there, that was a moment where the euphoria in the market was literally at its peak. And very shortly after I recorded that video, the euphoria left the market. And what happened? All these stocks started to fall. They started to bounce back, and then they fell more. And as we know, throughout 2021, it just got worse and worse and worse, and into the beginning part of this year. Okay? And so I look at this in a situation now where I'm looking at this and I'm like, could this be a moment in time when we're about to flip the other way? Now, no one knows if it's tomorrow or this week. Who knows? Maybe today was a low. I don't know. Square, look at Square today. It hit a low of 133 and it bounces back that strong in 144. That was, that's just something some folks will look at as maybe an indicator, right? Look at what happened with ARKK today. Look at the reversal in Teledoc. So I'm not going to predict this is the bottom for many of these stocks, because that's a losing game. Just flat out, trying to predict this is the bottom or this is the bottom. It's just a losing game. It's too hard to call. But it's very interesting that I feel the exact opposite of how I felt when I recorded that video on January 13, 2021. And like I said, right after I recorded that video, the euphoria levels just started going down and down and down and down. And here we are in this moment where euphoria levels are pretty much at all-time lows. And I think it's a matter of time before we start flipping the other way and we start getting some enthusiasm back in the market. And keep in mind, when you're coming out of these sorts of markets, right? Very, very important to keep in mind is when you start getting some rallies in these stocks, people don't even believe them, right? So look at a Square today from 133 to 144, right? A lot of people think that's a fake rally. It's going to be right back down to 133. It's going to be a new 52-week low of 120, 110. That's the way people start thinking. And it could be accurate. But just many times when people get that bearish, things usually flip the other way, right? Now, I was buying a lot of stocks here today. I'm going to likely do a video on Financial Education 3, maybe in a few hours, going into all the stocks I was buying today, which was a whole lot. Much love as always, guys. Hope you enjoyed today's video. Make sure you subscribe and have a great day.